Good evening and welcome to today's Market Close Report. It was a tale of two markets today, with China's A-shares surging ahead while Wall Street remained cautious ahead of key economic data. Let's get straight to the numbers. The Nasdaq Composite closed at 25,837 points, up 1.29%. The S&P 500 finished at 7,509 points, gaining 0.89%. The Dow Jones Industrial Average ended the session at 52,224 points, up 0.74%. The VIX Volatility Index closed at 17.05, dropping 8.58%. The 10-year Treasury yield rose to 4.63%, up 0.65%. The dollar index edged higher to 101.19, a gain of 0.22%. The offshore yuan held steady at 6.7675 against the dollar. Bitcoin traded at $66,304, up 1.78%. WTI crude oil settled at $84.70, a solid 3.05% gain. Spot gold finished at $4,085.80, up 0.86%. The strongest market globally today was China's CHINEX board, which surged 7.05%, leading all major indices worldwide. There was no systematic weakness across asset classes, although the VIX decline deserves a note of caution as we cannot independently verify the time window for that data point. The defining characteristic of today's session is structural divergence, with a probability of 70%. We saw two clear capital flows emerging. First, Chinese A-shares experienced a sharp risk-on rotation driven by new policy stimulus. The government announced structural tax cuts for new energy, semiconductors, and biotech sectors, triggering a massive wave of buying. Money flowed out of defensive stocks and into growth names, creating a dramatic shift from the defensive posture we saw just yesterday. Second, U.S. markets remained cautious ahead of tomorrow's release of second-quarter GDP and core PCE data. Investors are reluctant to add risk positions before these key numbers. Instead, capital is parking in high-dividend stocks and leading tech names as temporary safe havens. The contrast could not be starker. China's market is driven by domestic policy momentum, while the U.S. market is waiting for external data confirmation. This has created a fragmented capital flow pattern. Looking at the evidence, the CHINEX board's 7% surge came with significantly expanded trading volume, indicating aggressive buying. The Shenzhen Component Index gained 4.81%. In the U.S., while all three major indices closed higher, the gains were modest. Nasdaq futures were up only 0.69% before the open, and S&P futures added just 0.37%. This tells us that bulls lacked conviction to add positions ahead of the data. The biggest surprise today was the sudden implementation of China's policy stimulus. The market completely ignored a bearish headline from yesterday, when the U.S. Commerce Department expanded export controls on EDA software to China. Instead of focusing on geopolitical risks, Chinese investors chose to concentrate entirely on domestic stimulus. This is a critical lesson. During policy window periods, the weight of domestic policy surprises should be significantly increased in our analysis. For tomorrow, all eyes will be on U.S. GDP and core PCE data. If the numbers come in line with expectations, Chinese A-shares are likely to maintain their strength. If the data surprises to the upside, we could see profit-taking pressure on today's gains. If the data disappoints, particularly GDP below 3%, that could actually provide another boost for Chinese equities. The dollar index is expected to trade in a range of 100.8 to 101.5, with a bias toward strength as cautious sentiment supports safe haven flows. The 10-year Treasury yield could test 4.7% if inflation data proves stubborn. For the Nasdaq, expect range-bound trading between -0.5% and +0.5% as options hedging dominates ahead of the data. Our key conclusion for today is that capital ultimately flowed into two distinct destinations, Chinese policy beneficiary sectors and defensive safe havens like gold and treasuries. This was not a systematic risk-on move. The strategy going forward should be to maintain a controlled long position focused on China's policy theme, while preparing hedges for U.S. macro data volatility. The probability distribution for tomorrow stands at 60% for further upside, 30% for consolidation, and 10% for a downside surprise. Stay tuned for our morning briefing with full analysis of the GDP and PCE releases.